I did a popular video. Actually, it was the most popular video on the channel, which was about China selling U.S. treasuries, right? They were the largest U.S. treasury holder on the planet, and then they were up to like $1.4 trillion, and now they're down to 800 billion. So every month, every quarter, they're selling billions and billions of dollars in U.S. treasuries, and they're getting out of U.S. denominated assets, right? And now the BRICS, which is, as we know, what they are, the Europeans and the Japanese government is also now kind of, and now the Japan is the largest U.S. debt holder, about 1.2 trillion, 1.25 I think trillion dollars, and now they're starting to liquidate U.S. Treasury bonds, right? And they sold $63 billion worth of U.S. bonds. Now there is this trend, and a lot of people asked me after that video, do you think the U.S. is going to lose the reserve currency status? If that happens, watch out. Okay, we're in huge trouble. But so far, with all this BRICS selling, Japan selling, China selling, is not affecting it, obviously. Okay, because the total addressable market when it comes to trade, right, import and exports. But the other thing that happened that I talked about last week is, the Saudis abandoned the petrodollar now. Now they can transact, sell oil around the world by yuans, by yen, by euros, things like that. So there is this movement towards getting away from the dollar-denominated assets or holding dollar-denominated assets, because the U.S. dollar is losing its value because we have no control of our spending, and that's hence we don't have control of fiscal policy. And then, of course, we don't have control of the monetary policy, which follows the fiscal policy, which forces kind of really the Fed, we call it print money. They don't print money these days anymore, actually physical money. They add zeros to their ledgers. And that's what they do. And that's why we have a $35 trillion deficit, which is literally going up a trillion every 100 days. Okay. So to me, I think these states or these countries have figured it out. They go, wait a minute, I'm buying these bonds from these people. Well, it's a 30-year bond, let's say. In 30 years, that US dollar is losing 5 to 7% of its value every single year. Well, by the time this bond that I'm holding matures, think about it. I'm not getting any. Yes, I am getting the bond back when it matures, the dollars, but what are those dollars going to buy me 30 years later? Well, we know ourselves, right? What is our $100 buying these days? Not much, because it's losing 4, 6, 7% of its value every single year by the Fed printing, they call it, money. And, when it's a supply demand thing, when there's more of something, the value is going to go down. The supply of dollars has exponentially gone up. So the Japanese now are joining the bandwagon, that dumping the, there is a danger in this, right? So we have to fund our deficits by issuing new bonds. Well, that means we need to sell bonds to people who are interested in getting a safe return, as the US bond is supposedly the safest investment on the planet. Well, in order to entice them to buy these bonds, we have to put an interest rate on it. We have to give them a return to the buyer of these IOUs. Okay. Well, now it's at 5%. Now our $35 trillion worth of debt servicing is close to $1 trillion a year. Trillion a year. Interest, just the interest, right? Well, I think that's going to keep the interest rates higher for longer, because when you do come to the market now, offer new bonds, and now the Japanese are selling, the Chinese are selling, the Saudis are selling. Well, who's going to buy all these bonds? Somebody has to buy it, right? So we are adding to the supply. The Japanese and the BRICS are deciding, well, we don't want any more of these bonds because it's a silly game that we're playing. Our dollars are not worth anything by the time these bonds mature. I have a feeling that this is going to keep the rates longer than necessarily so. I mean, I don't think U.S. is going to lose its reserve currency status, but I think the game is on now. And because what currency on the planet is going to replace the U.S. dollar? Is it going to be the Chinese yuan? I doubt it. Is it going to be the ruble from Russia? I doubt it. Is it going to be the euro? Definitely not. Is it going to be the Japanese yen? Definitely not. So there aren't too many choices. Now, the one choice is obviously Bitcoin, right? I mean, it's not a currency, but it's finite. Not much more of it can get created, just like the Fed does, adding zeros. But then it's only $1.5 trillion market value. There's hundreds of trillions of dollars sloshing around the world. So to replace the US dollar is going to be very difficult as a world's reserve currency. But what could happen is that the game is on, then people are catching up after decades of holding these, IOUs from the US. They're kind of going like, okay, I think we had enough of this game. And it may just keep rates higher for longer unnecessarily, and that's because of our debt, and that's because the Fed is issuing all these bonds, and all these people are selling the bonds. So for every seller there is a buyer, and these buyers are going to be very critical and very discriminatory when they buy, depending on what kind of return they're getting. Because if they're buying a bond from the US Treasury, a 30-year bond at 4%, and inflation is running at 2.5% according to the government, which they brought out today, which I think is completely hocus pocus. So what is the actual rate of return? You take the 4%, take the 1.5 out. I mean, take the 2.5 out, you're at 1.5. They may require more. They may require more of a return. And if they don't buy these bonds, we have to raise the rates to make it palatable for these, hedge funds or pension plans or other countries to buy these bonds and put them in their books. So that's the catch-22 that we're going to face, I think, not in the near future, but in the next 3 years. And but game is on. People want to stay away from U.S. denominated assets, and I don't blame them. If I was them, I would do the same thing probably.